Hey, everybody, welcome to the Margin Makers, where margin is made early or lost forever. Hey, Dave, good to see you again. It's been a minute or two.
Same here, Brian.
I know Monday is the first day of fall, 87 degrees, so I thought I'd put my fall attire on, even though I'm sweating profusely.
A
Hey,
little
before we jump
early.
in, I noticed you guys just published a new white paper, right? The market is shifting and the pace is only accelerating. Dave, I like this so much I printed it out. So I think it's a worthy read for our listeners. Can you just before we get too deep today, can you kind of give us a link, or can we throw it in the notes or something? But I think it'd be helpful for all of our listeners to grab this and check it out.
Yeah, great. It's really it's tabulating the cost of the current state. We know that the go-to-market sort of model, sales model is dead, is what I would say. And the cost of that model is very significant and focused on. We refer to something called the commercial ratio, but basically the cost of the teams that you have to have in place, the amount of time people spend internally trying to do research, the amount of time that is spent on trying to convert low margin deals to wins when there's not real alignment, the amount of investment that goes into this effort that's really a losing model is incredibly high, and we can reverse that. But the point is that it's costing businesses a fortune to run the current models the way that they are set up,
Yeah, I'm,
and
I'm
that's what
kind
the
of
paper's
smiling. You
about.
mentioned that the sales model is dead. I think unfortunately it's still alive. I think that's the real problem. That when we keep living by something that doesn't work anymore, it just destroys our margin even further. In fact, today's topic, I think you picked this one out. I really likes the margin squeeze, right? So let's kind
Right.
of talk about what this really looks like and some of the ramifications. But because I think there's a way out of this, but not based on most organization's current trajectory. Is that fair?
Yeah, absolutely. I think the way that there's got to be a shift. Companies need to adapt to the new world, and as buyers have basically rotated away from being willing to meet with and talk to sellers, which is widely published and very well known, the statistics, but it is a real problem out there where the sales force in the traditional sense in the sales model of product selling isn't working, and buyers do not want to engage and have disengaged. And so what do you do? How do you adapt? What's the new way forward? So I think that's where the squeeze is happening is, as you pointed out, for CEOs and CFOs in particular, the focus is on profitable growth, right? And when you have quarterly earnings calls, those quarterly earnings calls are about the earnings and the earnings per share, and that requires that you get margin. But as we pointed out before in some of our podcasts, margin isn't just below the line, it's made above the line in the revenue itself. And I think that that's something we want to introduce today and reinforce with CEOs and CFOs, that you can create margin in the top line, because ultimately you're going to run out of space to take it out in operating expenses. And, you
I
can
think
only
AI
go
is
so
gonna
far with
compress
that.
those. Yeah, I think AI is gonna further compress operating margins, and to your point, and the point of the whole podcast is, earning margin earlier or it's lost forever. You talk about this shift, and it feels to me, Dave, like that the sellers aren't equipped to solve it themselves. So, is it fair in your mind to put this shoulder this responsibility of margin through your sales function, not at the sales level, but at the CEO and the CFO level?
Yeah, it's time for CEOs and CFOs to get involved in the actual commercial model itself, because when you ignore it or you rely on the old model to continue to produce, and you're just going to sort of get by quarter to quarter, there's so many obstacles in the way that you need to be directly involved in as a CEO or CFO and eliminating. And, we talk about alignment, but one of the principles of getting out of this jam of margin compression and the three C's, as you call it, with commoditization and this endless sort of race to the bottom, is it's really aligning with customer needs much faster, much more quickly, being involved early, and it's really unlocking all the capabilities in your organization to provide outcomes to service those needs of the buyers. But that's where things are going. And unless you set up the apparatus to create that alignment effectively, efficiently, to allow the sellers to bundle capabilities together to match those needs in innovative ways, you are blocking the progress. And only the CEO and CFO can get those obstacles out of the way. So they've got to be involved. I mean, it's just critical because otherwise the obstacles are perpetually there and no one can work around them without senior level coming down and helping to change the way things are viewed and done policy wise inside of siloed organizations, in
Yeah,
my opinion.
and I think that that makes sense, Dave. And I think this whole idea of understanding responsibility, but not blaming, right? I think it's all about adapting. And I want to add the word now to everything you just said, because as we've talked in earlier episodes, that margin is won earlier at higher levels, but there's only room for one there, right? If we're waiting, hanging out at the very bottom when everybody's always shopping and looking for a solution, they'll take on any quotes, right? Everyone hangs out there.
Yeah, I think there's kind of an arms race here, and as we've talked about before, this idea of signal based strategies, understanding the customer needs quickly, using customer signals versus relying on the sales force to just find opportunities that they can go sell into. That is becoming a dominant sort of commercial strategy in and of itself, and it's part of what I call go to customer, but it's the idea of working backwards from customers' needs and aligning everything to the customer because the customer is spending the money. They're only going to spend the money and fund initiatives where there's a sense of an urgent threat, as you point out, Brian, a specific need to actually spend those funds now, immediately. And you're either there or you're not. If you're in the room and you're the first one there, you occupy a huge piece of that pie and you can win really big, high margin, high value deals quickly at a lower cost. If you're not in the room, you don't even know what's happening. And you're basically capitulating that ground to your competition. So you've got to figure this out to A, preserve margin, B, protect yourself competitively, and C, it's actually, the good news is it's cheaper. It's cheaper to do this because it's less people. It's more about quality, not quantity. You've got an army focused on quantity now and revenue, and you've got to build a quality force that's focused on high value, high margin deals getting in early. And
So
it's different.
yeah, I'm hearing a force multiplier effect here, right? Because when you think about creating greater margin through your sales function, I personally think that sales organizations are way too bloated from a cost perspective, too many salaries, too much commission for the effectiveness or for the margin they're actually creating. So not only are those costs high, if they're unable to create margin, that compounds your effect. But if you could reduce the costs, right? Do we really need 180 or 300 salespeople out there in today's world? Or do we need fewer, more capable and effective sellers earlier at a higher level, generating greater margins? So if we can reduce my costs and boost my margin, I think you've got that force multiplier.
Yes, exactly. That's exactly right. And we've seen it play out. And, I've lived through it myself, but it's much less expensive to have an elite team that's able to go win bigger deals with the right signals, the right information, the right intel about the stakeholders involved, the right business acumen than it is to fund a massive sales organization that's going after commodity sales. It doesn't make any sense. So you get a double effect. You get higher margin deals, you get more of them. One of these deals can be 40, 50 times the average, size of a commodity sale, but it's loaded with margin and potential future margin because you can optimize and increase that margin over time. And it takes a lot fewer people. They're more skilled. It's more of a team approach. This is why we need CEOs and CFOs to pay attention to this because they have to get behind. Let's test a different sales model, a different approach, a different strategy with go to customer and this alignment approach and take the wins and then scale it out. And that's what
Yeah,
I think you're
I,
advocating.
I get that. I like, and I really like this idea of go to customer. I think that I'm hearing the word indecision way too often, way too much now that I've ever heard. And I'm hearing people still brag about a long sales cycle. But you know what a long sales cycle means to me, Dave? There, there's no alignment.
Right. Yeah.
Yeah, yeah, not going to buy. And I'm deluding myself into thinking there's something there. A delayed decision means there's no priority. So I like this idea of go to customer. I love the idea of alignment. And you mentioned this the C level getting behind something. So let's bring some real not tacticalness, but practicality. What do we want them to get behind, Dave? Right? Because I'm picking up what you're saying, right? We don't want to have so many people selling low value deals. My costs are high, my margins are low, and we want to do it differently. And we say we want them to get behind this. What specifically do you believe they need to get behind from a behavioral perspective, a belief perspective, a KPI perspective? Kind of just walk us through some of your thoughts there.
Yeah, great. I think, one of the core themes that's probably the most general uh, place to start and the way to frame it is, as I would start with account expansion. We've talked in the past in these podcasts about not all revenue is created equal. Well, not all customers are created equal either. And I
Sure.
see so many businesses with this quantity versus quality focused on businesses that don't have the ability to buy bigger deals. And so I think that really looking at a targeted account strategy,
Okay.
account expansion, prioritization, and focused effort within selected tiers of accounts where you can really drive expansion selling. It's a relationship rhythm that you're pursuing there, not a transaction rhythm. And you're putting in place a team that can work its way across multiple buying centers within those larger scale accounts. And you can go after bigger at bats. So when you use signals to go after urgent priorities that get initiated within these large enterprises that spend the most, and I talk about the economy of key accounts in the global 2000, just take the global 5,000. These people spend enormously more dollars on everything than their smaller counterparts. When you get in early with those guys, you get the big plays and the big wins, and you have to just start focusing there. But we have seen some tremendous gains very quickly. And that's the good news, Brian. We've seen companies go in or the teams go in and win 10 million, 40 million, $50 million growth, expansions just within a single line of business, let
Yeah.
alone more lines of business within months, weeks and months. And that's what's possible. And so that's where I would say account expansion, account growth, targeted account strategies. That's what they got to get behind is that focus. And it's not a monolithic just sell. It's got to be sort of a strategic stratification of accounts,
Yeah. What
prioritize the right ones and go after them with the right skills and approaches and methodologies and people, you know?
what if you run into an organization? Oh, yeah, we do have that. We have an account strategy. We have a this, and they have the same labels that you're labeling, but I don't think you're talking about the same things they might be thinking, right? Where, oh, yeah, we have this account based approach. We have this, but what are they doing wrong yet they think they're doing right about that?
Well, it probably is. It comes into. It's easy to say, but it's the execution, right? It's the actual real execution layer. So there's a couple key things, right? It's there's customer. Well, there's information and news that come out on customers, and you can use AI to read the news. But signal based pre-intent signals are much deeper. They come from many more sources and originate from a much broader. Think of it like news feeds is sort of a speedboat on the top of the water, on the top of the ocean, and yet there's this 20,000 leagues under the sea sort of view of an account and all the needs within there. So
Yeah.
there's a lot more to understanding and prioritizing the total array of opportunities, growth opportunities, and top problems and needs those customers have. So it takes a greater degree of analysis. Now, one of the things you talk about, Brian, is finding the most urgent challenges, not just pain points, not just aspirations, but urgent needs that are happening now. Well, you have to have a signal based strategy that's picking these up and you have to monitor them over time. You can't just like, oh, I saw something and, I'll see if somebody acts on it or not. No, this has to be a very deliberate strategy. Then it sort of executes from there down the
Well,
path of alignment, a continuous approach, um, a continuous process to go after that with
that
deliberately.
That's powerful, Dave, because earlier I mentioned that there's room for everybody at the bottom, right? Why not take more quotes? Doesn't hurt it. Doesn't it's nothing off my back. But the opposite end, right? So the race to the bottom is where everyone is, and we're trying to sprint to the summit, being there first, fastest, right? So
Right.
with this idea of signal strategies, what we're really saying, I believe, is that you may not really be doing it properly today, but what if your competitor was? If this is a winner take all, room for only one at the top, right? Who gets the lion's share of the business? I don't think there's a lot of value in being close or second, right? It's like you have to be doing this now, I believe, right, and be very aligned with what emerging threats they might have versus the pain points. Correct?
Absolutely. And I think any CEO and CFO would recognize everybody's got a top 10 or a top 20. It would be devastating to lose one of those
Yeah,
top 10 or top 20. Well, why are they the top 10 or top 20? Because you sold a lot of things to them. Why did they buy a lot of things? Because the team has a relationship, they've developed trust, they've expanded across the account. But you have to build and defend that moat around these large scale
yeah,
customers, because the if you don't, you could lose the customers you have. And if you get good at this, you would win the customers you want, and you would protect them over time, because you will have built an ability to be in the room first when they're solving problems and become the trusted player to
yeah.
do that with them. And that's the core essence of what we're really talking about,
Well,
right? Is you have to get good at this for a bunch of reasons.
yeah. I mean, you talk about playing defensive, but I think um, if you don't, I mean, I would imagine your top competitors are wanting to do the same things to you as you want to protect. And
Yeah.
and I think one of the problems I see happen with account management structures is they focus on renewal, not really growth, right? All growth has to be sold, and we focus on satisfaction versus really bringing ideas, right? Being super aligned at the very tip top. I've heard this so many times where clients will claim that they won business at the very top, but they never stayed there. And over time, they just kind of slid their way down to the bottom and they're stuck at procurement, which leaves them super vulnerable to someone who might be picking up these signals and just comes in and takes the business away. I think that's a very much a reality. Fair?
Well, absolutely. And customer retention, just in general, what does it come from? Well, when you sell a customer more than one product, you sell them two products, three products, five products, the length of retention goes up. If you all, is this isn't a single transaction sale. This is usually a basket of things that you've sold to a bigger company over time. And therefore it's different. It's you're building a annuity. And this is where the margin comes in, because the margin growth, the margin expansion comes from building those bigger relationships with a centralized team that is driving more top line across a wide array of opportunities within these organizations effectively. And that's where you have the lower cost and you have the higher margin top line and the lower cost in OpEx combined. But what they don't know right now, Brian, we hear this all the time, is they don't know what to cross sell, upsell next, let alone who is involved or how to communicate the value to them and whether or not that need is urgent, as you point out, and where that prioritized. So that's what we're trying to call attention to CEOs, CFOs, to pay attention to getting this signal based model up and running, run it on the accounts that spend the most, scale it out, across your organization in a thoughtful way that begins to create this margin. And you can basically fix this problem very, very quickly, get in charge of it. But I like to say, what's in your pipeline? But you want to feed the pipeline with high quality, higher margin opportunities. You don't want to be watching a pipeline with low value, highly commoditized deals that take forever, that are never going to close in the first place,
It
because
reminds
the
me.
customer is not involved in making the buy. You have to be aligning to what they're actually spending money on and what they're prioritizing themselves. And you got to pay attention to those signals. So that's what we're calling on CFOs, CEOs to say, what should my targeted account strategy be? How should I organize around it? What should be my signal strategy? How do I feed it in and prioritize the right opportunities? How do I look at that and make sure my teams are always on the right opportunities? How do I automate this and make it something that, can be executed as a system? And then as a CFO, what am I looking for, right? Well, first thing would be the quality of your pipeline, average deal size, the margin associated with those deals, right? Nothing would get me more excited than to see bigger deals in the pipeline that have higher margin that came from the customer that I can inspect and I know that they're going to spend money on and that my team is on it and we're the first ones in that ring. If I had
Mhm.
imagine having 100 of those versus what's in your pipeline now. That is the first place you would see it. And then you
Yeah.
would start to see the conversions. And then you start to say, well, why are these converting and these others not? And where do I see more of these signals popping up? Now you're in control. And that's what we want to get, give CEOs and CFOs is
Yeah, and
control.
And as we kind of wind down this episode and this idea of the margin squeeze, I think you're giving some ways out of this, right? Because the reality is, well, I still believe that we still staff a sales organization like there was no internet. We have salespeople placed all throughout to provide coverage. And I remember years ago, we need somebody in East Tennessee just because we need someone to show up. And it's like that's I still think we staff our organizations that way. The deadly part is not only is it too costly, I think they're all showing up when all the margin's gone. So this idea of the squeeze is happening. It is very real. We've talked about this zero sum game at the top and winner take all mentality. That's something new that I want CFOs and CEOs to realize. If I don't get there first, my competitor does, then I lose the margin. I might get some little stuff down at the very bottom, but I've lost my opportunity for margin there. And I think your whole idea around a go-to customer strategy is all around aligning to what their priorities are at the highest level, which in drives action, right? The opposite of indifference is alignment. Why do you have a long sales cycle if this were actually urgent? So this all makes sense to me. And I'd like to continue our conversations on the next episode, talk a little bit about how do we start looking at creating the greater margins, right? If we know there's a squeeze going on, how do we drive its velocity? In fact, one other thing I'd like to see is get away from sales velocity, right? That's an old metric of how much are you selling on a daily basis for your organization? But Dave, what if they're all low and late opportunities where there's no margin?
But right. What's the point?
I think you're selling your way into irrelevance, right? Versus what if we start talking things like margin velocity? How much margin are you creating for the organization on a daily basis? And I think your signal strategy becomes if we don't do that, we are at a significant disadvantage and we have no moat.
That's right. And I think, CEOs and CFOs have to introduce the idea of measuring sellers, whether they're account sellers or, whatever different labels you have on margin as well as and on quality, right? What is the quality deals? Are we selling the right things to the right companies in the first place? Are we picking our spots? Are we
Mhm.
playing to our strengths? Are we aligning with the customer needs? It's easy to say, oh yeah, our customers are the most important thing, but the behavior doesn't support it because it's just a monolithic throw everything at the customer and see if they'll buy something. And we got to get out of that. We just got
Yeah.
to get out of that quickly and take control, get rid of the obstacles that prevent alignment. And then, yes, you can get out of the margin squeeze, but the margin squeeze, to your point, Brian, is it's it's getting stronger. In other words, it's accelerating, and we are in a time where competitively, if you don't get out of this, you're just going to become the commodity provider very quickly. And once you're labeled that, and you're unable to react quickly to customers changing needs, you're competitively you're going to get crushed, and that's the urgency.
Hey, I believe, my friend, that there's real pathways here, right? I think that taking over the responsibility for margin and not relying solely on the sales function to solve this. I think that's the first step we as CEOs and CFOs have to take. So I appreciate your thoughts on this, on the margin squeeze. This go-to customer makes a lot of sense to me. I think your ebook or the white paper you just created was super, super solid. So this has been
Great,
great.
I appreciate it. And I would also tell CEOs and CFOs, your customers want you to do this. They want you to solve their problems. They love it when you do this.
You almost create a spit take there, Dave. I'm glad I didn't take a drink. Yes. Yes, it's that simple. They actually but that's true though. When you are synced up, when you are aligned with your
Right,
prospects' priorities, it becomes their purchase, not your sale. So yes,
right.
thank
They're
you for that.
delighted with you and they'll stay with you and but reward you with more business. That's the good news. And yes, you can get out of this, but you have to just get involved.
Yeah.
I think is really what we're saying. You got to get involved, take a look at this, get behind it, pay attention, work with your revenue teams, talk to your CRO and tell them that, you want to make sure that you're getting them what they need to be able to drive, better alignment, higher value, higher reach. What's in the way? Let's get rid of those obstacles. That's the first best thing CEOs in particular can do and should do.
Yep. Love it. All right, my friend. That let's call it a day. I think that was really inspiring, Dave. I appreciate your thoughts and the margin squeeze. You got to turn that thing around. Thanks, everybody.